I have a question for you. How do you create your own money and where is the value? Welcome to this second part of this introductory course on how to start investing in crypto. For this module number 2, we start from the assets that normally is something we immediately consider and therefore look at the price of that cryptocurrency, or look at the news, look at how many people are talking about it, and we are going to move to the importance of understanding the system. Not just the system behind that asset, but also the system in which this asset can operate, this cryptocurrency that operates. Because there is where we can find the value. Those are the 3 elements for today. Why does money have value? Why we are using the currency, the fiat currencies, for example, that we are using every day? You might have asked yourself, you might have realized that it's not the paper itself, it's not just the issuer, the institution. Basically, what's behind money is trust. Is trust that we are using a tool that is part of a system, and therefore there are some certain regulations. What are we talking about? Why does society trust money? First of all, because the trust is distributed in the system. You need to trust the government, for example. You need to trust the bank system. You need to trust the legal system because there are a specific set of rules. Therefore, when you also go, for example, doing groceries and you tap your mobile phone to the POS, you know that there's a network, a payment network that lets you simply do that simple gesture and go back home with your grocery, for example. Therefore, there is a certain regulation behind. All these elements that are defining a very complex system have in common the idea that there is a trust. The reason behind why we're using the currency we're using is trust, basically. And if we consider these elements, the whole story of how money, basically, the linear story of money, can be reviewed from a different point of view. If we consider as a starting point of money the barter, for example, the trust was not in the object, was in the other person. We were basically trusting for example, the neighbor that they would have given us object with the equal value. Then we moved into the commodity. From the commodity, we started trusting more the object itself, or better, the precious metal that was inside that option. That was all the trust we needed to exchange, to have an economic activity with strangers, for example. Then paper started to be managed. The first we know in history that started using paper money was China. We are talking about hundreds of years ago. And so far, we're still using paper money. Simply, we have a bank system at the moment and even a digital system. All those elements have a trust in common. Why things are changing? Why is it important for you? Because now blockchain is shifting everything. It's not completely destroying the system. It's not completely destroying what's happening at the moment. It's simply adding a layer on that. Trust is in rules. Basically, we are trying to reduce the complexity. How money is created today, why this is useful and important for us. You might have realized that it's not simply printing new money. The real money that is moving around, that is helping the economy to be developed, is a credit. The bank system itself is the core of this thing. Why this is important for you? Because what we see, what we have been seeing so far is that the possibility to create money through credit system is helping developing what? The inflation. The inflation that is hitting, for example, Western economies. This is creating the effect of losing power, losing purchasing power to the currency we are using. And this because of inflation. The balance on our, for example, bank account looks stable, for example. But if we go to the supermarket, if we go, for example, out for dinner, we realize that the possibility to have goods in exchange of the money we pay is reduced. We need more money. We need more, for example, coins to have the same result. So why this happens? What happens when trust breaks? We already talked about inflation. What's the effect when inflation starts to rise? Well, people with real money try to find a solution, and therefore we say that capital flight. Then what's happened next? Probably we see that the banking system is facing some stress. Why? Because people are trying to get their money back, but their money is normally used for investment purposes, probably. Therefore, we see that also that stress is becoming panic in the financial sector. And what's the next step? Normally, we have seen so many times in history, the institutions are questioned. Why the government is not doing something to take care of this situation, to solve this situation? And currency might disappear. Well, we are not using anymore the currency that our Roman people were using back then, because simply the Roman Empire ended, collapsed. Money survives only as long as there is confidence on the system that is backing the money. In the 70s, an economist, a Nobel Prize economist, Professor Friedrich Hayek, made a very important question. What if people could choose their money? With one system, basically, we are forced to trust the state institutions. But what if we move to multiple systems? Therefore, we can simply choose the best one for our needs. Back then, it was not possible at all. But now, if we consider what happened since the 2009 with Bitcoin, this is becoming a real things that is happening. We can choose a different system, for example. Why Bitcoin back then was important, was better, or was a real game changer? Because behind Bitcoin there was a radical idea. First of all, decentralized consensus. We do not need a central bank to issue this currency, for example. Because we have digital unbreakable rules. That's the second very important element that we can translate into blockchain. That is a common word that now you for sure have heard. And therefore, as a third step, we don't need a lot of paperwork, because it's possible to have open verification. That's the game changer, and that's the reason why we see that there is a new solution out there, and that's the reason why now we're talking about cryptocurrencies, and that's why we are going to see in the next modules that is not just the currency that is happening that we might be using, might not. There is also a completely infrastructure that is changing, that is changing the games of the economy game we are playing. With a new possibility to use, for example, a different cryptocurrency like Bitcoin we have seen, there's an important question that remains. What are the alternative store of value? If inflation is rising, what are the solutions that people have been adopting so far? First of all, we can consider gold and precious metals, for example. For centuries and centuries, those elements have been used for this reason. Then, of course, we have been considering land and real estate, perfect to store value, but also to generate value. And another element, another possible asset that is able to generate value is business. A business is capable of increase, for example, the capital we used at the beginning to start it. Now we see that we have digital assets. The digital assets are more and more present in our life, and that's exactly what we are going to discuss in the next chapters, in the next modules. What are the three key takeaways we can consider for this module? First of all, the system depends on trust. That is essential. Trust is behind everything. And even though currencies are changing, what is not changing, what remains is the value behind. Therefore, our goal is trying to understand how can we make the value to grow. Why this matters to investors like you? Well, basically, the next question you should ask yourself is, which systems can you trust? Which system can I trust? Thank you for attending this module.